Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Wednesday, November 6, 2019. Last night's market wrap video, that was kept that one for members only because I wanted to do both a brief coverage of the broad market. We didn't have a lot of new developments worth mentioning, but there was a trade setup, so I covered that last night. And what I refer to and continue to refer to is at least a near-term trading setup, for short-term active traders. I'll get to that in a second, as well as what happened today in the broad markets. And the other things I covered in last night's video was we have a short trade we entered yesterday on natural gas, which is a degas long. So that trade was up almost 5% today on degas. So mentioned, long trading ops on objective long entries on treasury bonds. TLT was up, nothing huge, but a little better than 0.6%, which for treasuries, that's a good move, especially if you trade ZB, the treasury bond futures, that's leveraged. You're talking, easily, I don't know, $500 or more on a contract of ZB. All right, excuse me, phone was going off there. All right, so the other things to watch would be, are covered yesterday, I should say, was of course our Acor swing trade. That was up another 5% today. Gold. So pretty much the theme in yesterday's video, and this is what I want to kind of tie in today again. Let's keep this a public video here. I'm not going to get into the specifics and targets on gold, silver, treasuries, but gold was also up and silver. So my the theme yesterday was, and this morning reiterated, looking for a sell signal, which did come today. We got that earlier, shortly after the open day, what I call a near-term sell signal on NQ, and that also played into what I expect would happen with the market going down. You'd have these risk-off assets rallying because, again, it was technical case was made. A lot of these at support oversold, and so yes, gold was up as well today, about 0.5%. Yeah, I think it was about 0.5%. Silver was up slightly, and again, Google and Intel weren't trade ideas; they were just some developments I pointed out there. So far so good. Check marks across the board. And again, here's the thing, guys. I'm talking about relatively small gains, near-term stuff. Why? Because this is where the market is not conducive to swing trading. It's been inching higher. It is in an uptrend. I've made no mistakes about that, or made it very clear. It's a clear uptrend. In other words, you make no mistakes about it. And until today, we had a slight sell signal. There's a little more work to be done. I'm going to get to that. But again, I've talked about this many, many times. The market is not conducive to swing trading. This is where I go into active trading mode. When I say active trading, very short-term swing trades that usually can last, a week or less, a couple days, and day trading as well. I'll get to that in a second. I posted all my, day trades on NQ on the front page today under the comment section of that post this morning. And in it, here's the funny thing is, NQ or QQQ closed the day. It did close down because we had the sell signals about a quarter point, but within there was plenty of money to be made on active trading. And again, it's all about when you have volatility extremely low, and you can see it here. The VIX is low, and if you look at QQQ, what do you see when you zoom in here? See all these candles? They're tiny candles. See these candles back here? They're big, they're large. The daily ranges are 3%. The moves over a period of just a couple weeks and sometimes days is 5-10% and more. And here, what you're doing is you're inching up or down a fraction of a percent a day, and usually the trading range is within the entire day or less than 1%. So the takeaway from this is that's when I do more active trading, day tradings. You don't always have those setups each and every day, but today there was, and we triggered the first of the sell signals I've been covering now for the last couple days, and that was, or let's just jump over to that post. Okay, so start out with in pre-market today. I posted screenshot was taken about an hour and a half before the market opened. NQ, and that's my preferred trading proxy. I put up a chart of ES, but I don't trade ES. You're going to get a lot more juice, higher percentage gains and drops in the tech-heavy NQ. And so I said, here it is. Modified that trend line slightly. Said sell signal would come on a break below that rising wedge, and from there I'll go and show you the charts as they were posted throughout the day. From there, let's go down to the comments section below. Okay, and so in real time as these breakouts happen, I took screenshots, posted in the comment section. Remember, if you're a member of the site, we have the new feature now where if you are interested in any of the trades, any of the trade ideas covered in any front homepage post, you can subscribe. There's a subscribe feature there, and it'll give you an email every time there's a new comment made. So these comments I made throughout the day. In other words, sell signal was triggered there with a break of the 60-minute below the trend line. It was fairly impulsive. You can see the breakdown there. And though I had us going down here to this first target at 81.2790, as I often say, the charts are dynamic, and so is my analysis. So what happened, I also said we'd need to see this. To further a sell signal, you need to see a break below these trend lines here on QQQ and SPY. We have these 60-minute uptrend lines. Remember, even though I might not be trading SPY or even QQQ, again, I trade NQ, that's what I was trading today, I watched these as well. So there's a takeaway from that I'll show you here. Okay, so earlier today, after the breakdown, which triggered our sell signal, that put you short, pointed out that QQQ had come down and hit that trend line, that uptrend line. And so I said, because we hadn't tagged it in a while, this is the first tag of that trend line in a while. And as I often say, and here's a takeaway from trading, whether you're day trading or swing trading or investing, the initial tag of a trend line from above that hasn't been visited in a while, even though I think this trend line will go soon, it hasn't gone, and at the very least you're going to get a bounce. And you can see if you look very closely there, you see a little trend line right there, our resistance level. So I had a very small bounce, and as I posted there, that's in that post I said I reversed it. I went covered my short, and I was right at about the low of the day in NQ, and had a bounce target up here to 8200. You can see I added a horizontal line and then had us reversing. And so it doesn't sound like much, a bounce there. I measured it out from the breakdown today to the lows to about this point here. NQ dropped, what was it, 0.6%. That's about $1,000 per NQ contract. Each and every NQ contract is worth about 164,000. So 0.6% drop would net you about $1,000 or so. Then by covering there, because the odds, again, even though it's a small bounce, you're talking micro levels. But again, the takeaway here is you might be saying, I'm not a day trader, that's way too much. These are small levels. If you're trading, actively intraday or day trading, you don't have any gaps to worry about, so you can take a much larger position to make it worth your while. And so from there we bounced, and I mentioned, even though I had that 8200 target, I followed up here posting I might prove to be a bit early, but I just reversed from that NQ long position, taking off the lows back to a short position, but only half. I only went back into half the position I had before, and said that if NQ makes it up to that 8200 level, which is the original bounce target, then I would add the second half. And here it is. So that was the first one there. That's where reverse, and there's where, so at 81, about 81.90, and again that was about a 0.4% bounce. Now, okay, you're saying 0.4%, that's not much. Well, per contract in NQ, that's about $650. So not only was there a gain of $650 to be made, there was also a loss aversion of $650 or give back in profits. So that's about a $1,300 per contract juice there. And of course, like I said, I held off on the second half, adding that back. We got the total bounce. We did hit just before the close $8,200 level, which was about a 0.5% bounce back off the lows, and again that's about $820. So again, micro stuff, forget about it. If you're new to trading or you're not an active trader, that's not for you. But this is kind of the world I live in. If there aren't opportunities, now we have plenty of opportunities. I just went over that. I mean, we have trade ideas on crude oil that I've shared today, short there that's played out for, actually posted it first yesterday. We're already up, from where I posted as the first objective entry, over 2% on CL crude futures. And then today I posted a second objective short entry this morning that was triggered, and there was trades profitable. Like I said, we have the natural gas trade that's profitable, and the unofficial trades on treasuries. So there's a lot of other things, but I just wanted to go over these micro levels. Now there is a takeaway. I'm going to get to what to watch for going forward. All right, so let's go to the current chart. So right before the close, somebody asked, "Hey, Randy, are you gonna, go home short with that position?" I said yes. I said I'll even allow it. If NQ wants to run up here and backtest the trend line, that's fine with me. We closed at 8,200 right on there. There was a ramp after the close, which is almost certainly the short cover. I'm sure there were a lot of shorts that came late to the game that didn't take the breakout right away, probably shorted down here, and they're getting squeezed out. I know Interactive Brokers, that's my primary trading account. What happens is 10 minutes before the close, if you have too much margin, you're leveraged too much, they're going to give you a warning. They're going to close you out, and if you don't close your positions out, and then they start buying you back in right after the 4 p.m. closing bell on things like futures and even stocks after that, in the after-hour session. So right after the close, we hadn't violated that 8,200 level, but we had a little tick up then. And again, we're looking closely. It's a small candle, but what I'm giving you now are, again, these are micro levels, guys. There's not any power. There's really not any sell signals even remotely close on the daily chart. We just have this sell signal here. There's that breakdown, and I'm zooming in. This is that same 60-minute rising wedge pattern. Here it is. As you can see, same chart I've been sharing. I'm just zooming in a little tighter on it because, again, this is a little micro world, I call it, and these are where these movements hardly even register on the daily chart. The candlesticks are so small, but again, if you're focused on those the intraday charts, you can trade this way. So here's what I think will happen. Let's just keep it there. We have since the last update, I added this downtrend line right here off the highs, and you still have the bottom of the bearish rising wedge, which again, the breakdown today was fairly impulsive, and so we're coming back in, and we have intersecting uptrend line and downtrend line resistance. If we go any higher than that, and that's fine, I'm going to give it a little room right now in my those short positions. You have a little bit of minor resistance right here, about 82.30 or so. You can see the reactions right there. So this is really ideally where I believe NQ will stop and should stop. Right there, it's a very relatively small area, confluence of resistance, and so this is my outlook for tomorrow. Boom, down. That's that same target I laid out today. like I said, I had noticed during the trading session that we hadn't yet hit, and right when we hit that uptrend line on the QQQ 60-minute chart, that's right where we reverse. So I often say this: even though I'm trading one thing, I watch everything. As far as the indexes go, I might only trade NQ like today. As far as my active trading, I still have those other positions I talked about. This is just one of several, including swing positions. But you have QQQ, I'll watch, SPY, ES, and all of those. And if we look at QQQ, let's go to the 60-minute chart. Okay, remember this was the chart posted, taken today at 11:55 when QQQ hit that trend line on the 60-minute chart, showing a small bounce up to this resistance level here, which is comparable to that 8,200 level on NQ. It's the same resistance level that was in earlier today, and here's the chart. And so you zoom in tight. There it is. There's your tag. That's an objective time to cover, again, for active trading stuff, and game that bounce. Like I said, relatively small, but per contract in NQ, you're talking, minimum, you saved yourself probably over $1,000. You made profit on the long, and you also avoided the give back on the shorts. And so now where we're at, if you don't trade futures, you trade QQQ, or you trade futures, you want to watch this trend line. This is a pretty significant trend line on QQQ, and there's that. We closed right at that resistance level. And SPY still a little bit above the way I have this one drawn. I don't have as many reactions here on SPY on this trend line, so that's why, although I'll watch it, this is the one I've cleaned this up, took out some of the other lower levels, lines, and you can see again there's a trend line on QQQ. So should that break, you can see a minimum target. Minimum is about 197.65, and quite likely down here at about 195.68. And just like, I laid out earlier on NQ, I still, favor a move down here to at least that 81.23-ish support, most likely followed by reaction there, and quite likely still leaning this way. We'll see how things develop tomorrow. If I see what I want to see between right now and tomorrow, let's say, after trading opens, I will make a decision whether to, hold on and hold out for this 80.50, 80.40-ish support zone right there on NQ. And of course, it's assuming I'm not stopped out before then. It's like any trade. And again, this is why you don't put all your portfolio in one trade. You have other things. And it's like, I use the analogy of an engine firing on all cylinders. Even if you go out with a big V8 engine, at least in the old days, before the days everything was, electronically controlled, the car would still go. But if you had a, 4-cylinder, or, let's say a motorcycle with 1 cylinder, or a small engine, that cylinder goes out, you go nowhere. It stops moving. So that's why gold, silver, natural gas, crude oil, and not to mention all the stocks that we've highlighted recently that are doing well. Okay, and finally, I wanted to just touch on this again: the extreme low volume and what it could mean here. When I started the video, I told you how we closed right below the 8200 level, pretty good resistance level on NQ, correlated with that where we closed on that resistance on QQQ as well, and then we had a drift after. I attribute that to just that relatively small buying pressure from, and again, this is just my guess here, that the brokerages like Interactive Brokers who blow you out of your positions after 4 p.m. close, because usually nobody buys right after 4 p.m. There's not any earnings that they don't release them right at 4 p.m. Usually comes out a little later. There was nothing that I saw that would have caused that spike. And again, it's probably day traders that took shorts at the wrong time today. Again, just my guess, but let me show you something. And that would mesh with this. You can speculate all day long on why something's happened, but these are the facts, and I've shared this chart many times. This is my low volume indicator. I use a 10 exponential moving average on the volume, and I have a red line that I've set there, and then a yellow line. They're both extremes. The red's a higher level. The yellow is extreme. We only hit it here. You can see it came down to right here, so I don't know where that arrow went. I had a yellow arrow here. Some of my arrows disappeared, or maybe just that one. Either way, there's a yellow arrow. That just means a little even more oversold than the red. But you can see that going back here, we're going back 2 years. Biggest corrections have come when you see this noticeable drop-off in volume to these extreme low levels. I have almost tag of it there. We didn't quite hit the red line. I should take that away. And I also say this: after a huge correction, everything kind of resets. Use trend indicators, kind of stand back. The market's going to do its thing after a 20 plus % drop. And again, we didn't even actually come all the way down to it. So you can see, boom, biggest correction 2019, second biggest correction, third biggest correction. And not by mere coincidence, they came when volume plunged down to these extreme low levels. And here we are again. We had one right here. We had a little correction. We hit the red line right here. And now we've hit the extreme yellow line, which means it will take very little selling pressure to cause a correction right now. And it also tells you, like I've been saying, once again, the market has made a marginal new high, but there's nobody there buying it. It's drifting up because the shorts have just been beaten down. They've covered, they've been squeezed out, so they're not really shorting yet. But yet the longs aren't stepping in and buying. The market's kind of drifting up on fumes here, as evidenced again by the low volume. And there it is on QQQ, and I've shared the same thing on SPY and IWM, and you can see it down here again, these extremes right here. You hit these levels right here sometimes. And here's the thing too, guys, is that I've said this often, sometimes these extremes, just like the VIX falling down to the support zone that I've talked about, the multi-year low, we have a bottom support zone where every single correction, all the big drops in the market have started from, and that's about, we're right above that now. But as I said, just like back here in the VIX, we had the same thing. The VIX stayed low on that level, and as did volume for an extended period of time. So as much as I would love to say this is a timing indicator, get short, put everything you have into shorts, of course I'd never say that. But as long as, as far as saying short the market because we're at that level, can't say it. Usually you get there and it doesn't last very long. You hit those extremes and then the correction sets in. 1, 2, maybe soon to be 3, but sometimes you get there and you have persistent low volume. And back then what happened, we had an excessive or extended period where it was almost 2 months or at least a month and a half of that extreme low volume. And what happened is you paid with the biggest drop that we've had in over a decade since the last bear market. And like I said, same story on the VIX. You go here, and that's what happened back then. So we're at that level too on the VIX, the bottom of the support zone, or close to it. We haven't quite tagged it yet. So maybe, I don't know, maybe the market's saying they want to have one thrust up, fake out everybody that took that breakdown today, blow them out. We still haven't broken the trend lines on SPY and QQQ. I need to see those broken before I have more conviction on anything more than just a quick tactical, like the day trades I made today, long short, in and out. But I'll watch this. We're very close, however. We came very close the other day, and again, that was these were the drops right here in the market. And this is the point I'm talking about, where the VIX hit this low level there. We did have a little blip in the market, a little pullback, but we stayed low. We kept on that level for months, and then finally we paid with what was the biggest drop, as I said, in over a decade. Throughout this entire bull market came from that persistent and extended period of low volatility, and once again, as I just showed you, low volume. So there it is. All we need now to throw in the mix is a good old solid sell signal in the markets, and we just don't have that right now. So everything I talked about, that's why I spent a lot of time talking about what I call micro trades or day trades, because when I look at this, there's nothing here on the daily chart that says short the market right now or put on swing shorts. And I know the vast majority of people listening to my voice are swing traders, investors, or trend traders, not active traders. And so, the only thing useful that I could really share on the broad markets today, since the public videos, I don't get into the individual trade ideas. We have members, paying for those, so that's obviously, we're keeping that, on the site as restricted content. But there may be a move here coming in the market soon for all the reasons I just mentioned. And finally, remember, just when it feels like the market's never going to stop going up, it's going to go up forever, that's usually when the herd mentality shifts. You got to think at the times in the last couple of years when you felt like shorting the market and when you felt like buying the market. And I think if a lot of you are honest with yourselves, you probably wanted to short right here, you probably wanted to short right here, and you probably wanted to get long right here when the market made a new high, right there when the market made a new all-time high, and etc. So that's just how things work. And it's weird. If you want to know why it works that way, it's just, the boat gets loaded to one side when everybody gets bullish and there's no one else left to buy. That's how it works. When the last long has bought his or her last share of stock, there's no one else left to buy. And again, I'm speaking, metaphorically. And that's usually when you get those drops. So we'll pick it up tomorrow. We'll just watch those near-term trend lines, because that's all I have. If anything develops on the daily charts, I look at this now, I can't see much, but what might trigger something more than just a quick pullback trade, things such as a bearish candlestick reversal pattern, maybe a big bearish engulfing candlestick. I like to see those after an extended uptrend. Here's one right there on SPY that marked the top. That's when a red candle engulfs the entire body of the previous candle, and the more candles the better. So you had one there on SPY, and you had a couple in QQQ at the highs in the past. There's one right there. So those are just, again, potential things. That's it. We have three doji candles there, separated by a gap right here. So who knows? Maybe something funky happens in the futures, and those 60-minute charts play out. We gap down tomorrow. That put a red candle like this. that has a potential for an island cluster top with these 3 candles separated by a gap on each side, and that I can tell you right now is a pretty one of my favorite patterns for shorting. Just like I like going long on the island bottoms. What you do is if you get a gap down, you short it. And now you might read in the textbooks, put a stop above, right at the bottom of the island. I know this market, and all it does, it loves to run stops because the algos, they're smart. They've adapted. They learn where retail traders for years have been placing their stop loss orders. So I always look at where would a logical stop be, and that's exactly not where I'm going to put my stop. So I give it a little bit higher. And again, you're still talking. And again, it's one of many scenarios. So if you gap down tomorrow, let's say here to 198.49. You put a swing short on at that point, and you have a stop that's about 1% above. So you have about a 1% stop loss order, and the downside potential could be quite large. You just let it ride, because if you got that, and again, that's just one of many possibilities. Island cluster tops are pretty high probability reversal tops. They're not, they're usually not meant for just a quick short-term trade. They can mark the end of a trend. So we'll wrap it up here, and again, we'll pick it up tomorrow if I see anything worthwhile mentioning in the indexes. This has been Randy Finney with Right Side of the Chart. Hope you